Hey traders, if you're keeping an eye on the Bitcoin market, then you've probably noticed a sharp increase in price over the last few days. A lot of people are speculating, is this officially the start of the bull run, or are we in another bull trap? Why should you be cautious about the hype at the moment? Are you about to lose all your money in Bitcoin? I'm going to break this down for you and give you some key tips and signals that you can look out for to make sure that you avoid losses during this period and turn them into profits. Later in the video, I'm also going to tell you how you can enter the $50 free prize giveaway, so keep watching till the end to find out how you can enter the draw. Let's dive in. So what's all the hype about? If you're a crypto follower, then you probably know that the Bitcoin halving event is right around the corner. The halving, as we've talked about before, happens every 4 years. It's written into the Bitcoin protocol, and it cuts the rewards in half that the miners receive for validating transactions on the ledger. The mechanism's designed to incentivize the miners and the validators to maintain the network and to control the supply of new Bitcoins entering the market. There's only a finite amount of Bitcoin that can ever be produced, and slowing the release over time can ensure the scarcity of the asset. The event's historically followed by a big bull run in the market. Over the last 3 halving events, we can see a repeating pattern emerges. We have a halving, and then a year of bull run, and then we have a bear market while the price retraces, followed by an accumulation period where it consolidates. We then see a short expansion and reaccumulation phase, and then the cycle starts all over again. So if the pattern's going to continue, then what we've probably just seen is the pre-halving expansion phase, which means that in theory we've got a reaccumulation to come. So if you look at this monthly chart, you can see in the last month or two before the halving itself, we've historically seen one last sell-off right before the halving. Here, here, and here. So the $1 million question is, are we going to see this repeat itself? There are some key differences to consider when we look at the crypto environment now than 4 years ago. Globally, the general knowledge and understanding and appreciation of this technology has massively increased since then. And critically, we've had the introduction of exchange-traded funds, or ETFs. Why is this important? Well, if you're an investment manager or a wealth manager, you won't be allowed to advise customers to buy cryptocurrencies directly, for a couple of reasons. Firstly, the regulator thinks that cryptocurrencies are too risky for retail investors to hold. So the investment advisors can't advise you to hold it, because that advice would be deemed unsuitable by the regulator, and therefore the manager could lose their license to provide advice to people. Secondly, the investment provider has a regulatory obligation to hold the assets in safe custody, and is deemed to have a fiduciary responsibility over the safekeeping of those assets. Most of them will outsource this to a specialist custody provider, and the rulebook of regulations that these providers have to adhere to is huge. If it was printed out onto A4 paper and stacked up, it would touch the ceiling in most rooms. They have to do daily reconciliations, mark-to-market valuations, segregate client and firm assets appropriately, prove daily on an ongoing basis that they have the right balances and the right pots, reporting any discrepancies as breaches, and they have to maintain best execution and conflict of interest policies and demonstrate the adherence to these policies. There's a huge amount of complex work that goes into running a custodian, and not to mention that the investment provider would want the assets reported in a way that they can reflect within their own systems, which in the current financial industry is all managed through the SWIFT network. If you want to open an investment account with your bank or broker and buy a Google share, the payment, delivery and settlement is all over the same SWIFT network that the banks use to make their payments over. And the reporting and reconciliation again is all managed over SWIFT, and the messages can take days to be processed end to end. Suddenly you have a decentralized network with a new and nearly instant settlement system. Banks and investment managers simply don't have the infrastructure to support reporting of crypto assets alongside the other investments in their clients' portfolios. However, through the ETF, they have a vehicle which can settle and be reported through their legacy infrastructure. They can give their customers exposure to crypto prices while maintaining their fiduciary responsibility, because they're using their proven custody providers that can handle the assets over the SWIFT network and systems. So this has opened the door for professional and institutional investment firms to start adding some exposure to cryptocurrencies within their portfolios. Even if it's only a small percent of their asset allocation, it's enough to be significant when you start to add up all the 1% increases from every firm's position. It's been reported that there are over 630,000 Bitcoins tied up in ETF custody, which as of today's price of $52,000 a coin, is nearly $33 billion worth. Why is this important? Well, there are only 21 million Bitcoins that will ever be created. 19 million have already been mined and circulating. So going back to Economics 101, supply versus demand, nearly 3.5% of the circulating supply has been taken out of circulation and tied up into these ETFs. These professional investors aren't going to be actively day trading. If they're adding exposure to their portfolios, then they're going to do so with a long-term view in mind. So these coins are essentially being taken out of circulation to be locked up for long periods. Less supply means that the increase or decrease in demand is going to have a more significant impact on the price, so we can see bigger upsides as well as bigger downsides. So that's the theory. Let's take a look at what the numbers are telling us. Here if you look at the daily Bitcoin chart, The RSI is sitting around 81, so we've got more larger average gains than losses, and potentially sitting in what could be considered an overbought area. We've got the MACD line sitting comfortably above the signal line, and we've got a consistently increasing MACD histogram, as well as on-balance volume showing a consistent rise as well. So all the daily signals are looking positive. This is what you'd expect in the middle of a bull market. Looking at the weekly chart, we've got similar signals. RSI is looking pretty toppy in the 80s, MACD again on the rise in terms of both the trend line and the histogram, and OBV's had a bit of a bumpy road, but it's generally on the rise as well. So how does this compare to 4 years ago in the build-up to the last halving? Looking at the 2020 daily chart, we had a rising RSI then as well, but it maxed out around the mid-70s before coming back down again. Again, we had a rising MACD line and a rising MACD histogram, as well as a rising OBV, until mid to late February when the retracement started. Looking at the weekly chart from back then, again we can see more similarities. We had these favourable conditions all the way up to the point that we saw the reversal. So if we're going to see repetition of this pattern, then I think there'll be a final retracement back down again in the next few weeks. We'll see a sell-off and then another consolidation that will take us up to the halving event before the bull run starts properly. Let me know in the comments below, what do you think? Are we going to see a retracement back down? How big do you think it's going to be? Jumping back to the current charts, going off these current indicator numbers alone, as a day trader I'd be thinking about riding the wave a little bit further up. I'd be looking at some intraday strategies to take advantage of some shorter term swings. But as soon as some of these daily signals or even intraday signals show signs of reversal, I'd be looking to get out, because I don't want to be caught in this bull trap and ride losses all the way down. This is exactly what I'm doing with my own strategies. Although I'm not manually trading, I trade with automated algorithms on Algo. It's a completely free to use software. You can build, backtest and run algo strategies, and you don't need to know how to write code. Just plug into your exchange account with an API and go for free. It's completely safe. It can only send buy and sell signals to your account. It can't withdraw your money, and you can make sure of that in the API settings. I'll leave a link in the description below. Here you can see one of my strategies. It's made up of a mixture of super trend, Bollinger Bands, moving averages and volume. It's currently sitting long at the moment and it's riding this wave up. And I've got rules in place to make sure that as soon as we start to see some reversal signals, it will take profits and wait until the retracement has taken place. I've made this strategy free for you to download for a limited period of time. If you sign up to our Algo, you can have this. I'm not a financial advisor and this isn't financial advice. Cryptos are a high-risk investment and you must do your own research because you could lose all your money. I'm not being paid to give this strategy away, I'm just here to share knowledge and experience. This is my way of giving back. When the bull run does come in after the halving, you want to make sure that you have a strategy in place that you can rely on to make you money all the way up. So get an automated strategy in place now, before then, so you can have peace of mind. Prize giveaway time now. I know I've said it for the last couple of videos, but I want to give as many people a chance to enter as possible. So if you want to be in the draw, then give the video a like and drop a comment down below. Let me know what you think. Are we going to see one last crash in the price before we go to the moon? Look forward to reading the comments and debating with you. Until then, stay safe, happy trading, and see you next time.